Hi, Divam.
Hi, Karan.
Hi. So today we are going to address some of the questions that our investors are having for a long time, past 3 months actually. So I think let's get started.
Yes, sure.
Yeah. So question one is the market is at an all-time high and falling. What is your view about the market in short term as well as long term? And should we invest now or should we wait for the market to correct going forward?
So I think that short term, the focus has moved towards COVID case surge, inflation, interest rates, and subdued profit margins that we have seen in the last quarter. So, however, the business prospects of the company which we cover and Indian economy look great. You look at the next 3 to 5 years standpoint, the profitability that is going to come in these companies looks great. The valuations of shares in broader market have become more comfortable with the recent fall. The valuations of our small case stocks have gone comfortable on the price to earnings and price to book value, and these are the times when which give you opportunities to increase your investment returns by allocating from SIP money. So we would suggest that investors should invest additional capital in weekly SIPs over the next 3 months, and continue investing in a disciplined manner.
Right, right. Another question that they're having is, when was the last rebalancing done for our portfolios? And as investors, they've been invested for 6 months, but they are seeing negative returns. When are we going to rebalance, and what should they do in these situations?
So I would say that so the last rebalance happened on 6th of September for a high quality right price, and on 30th September for the other small cases. We have launched two new small cases recently, but the rebalance for them is going to take some time. We expect that we are going to do rebalance for all our small cases somewhere around first week to second week of December. So on an average in the past, we have rebalanced our small cases once every 2 months. However, with the change in the market conditions and due to the fall and no change in fundamentals of any stocks in that period, we have not released any fresh rebalance. So each and every company in the portfolio is tracked closely on an ongoing basis, and with a focus to ensure that the company is in the path of growth, and the same is coming to lower valuations now is even a bigger comfort. So investors can allocate fresh capital in parts, as we said, as at these comfortable valuations.
Right, right. So some stock specific questions are also coming. For example, they're asking some of our stocks like Aurobindo Pharma, Make Money Organics, Yotamaki are in red. Should we keep holding? So they're asking, should they keep holding these stocks? And if so, why? Uh, Especially if they're in red.
So definitely, yes, each and every stock that we select in the portfolio goes through a lot of fundamental on-ground research. So as you would have seen yesterday, when the markets were deep in red, Make Money had hit a 20% upper circuit. So these are stocks. So these stocks in the portfolio, like say in HQRP, we have 22 stocks. All of them do not go together down or together up. So they go up in rotations, they go down in rotations, etc. So the benefit, this is the benefit of having a portfolio, right? So all these stocks are great and will outperform their peers in the small case in the coming quarters. And I think you should follow the strategy that we are suggesting in the small case on an ongoing basis.
Yeah, I think it's all about discipline.
Yes, definitely.
Okay. So the next question is, most of the stocks in high quality right price are either mid caps or small caps. So why have we not moved to large caps given that the stock market will correct and is correcting in fact?
So I would say that the idea of HQRP is wealth creation, and that happens through a long-term process. We keep on saying that stock market investments are for wealth creation and not for income generation. So and it never happens that market goes up or down in a straight line, right? They keep on doing zigzag on their way in their journey. So the alpha generation that can be generated is mostly through mid caps and small caps, and at these levels we feel that many large caps look very expensive. So HQRP is our flagship strategy, and over the years we have delivered huge wealth creation from such strategy through this discipline and through our research. So we would suggest that investing is all about discipline, as pointed out by Karan just recently. And I would suggest that you keep on having that discipline through us and keep on following this small case. We will definitely create a huge wealth for you in the coming years.
Right. So the next question is that it's a question on the new portfolios. So why should one invest in these new schemes? And is there any overlap with the existing portfolios that we already have?
So yes, Karan. So I would say, so I would first talk about the two small cases that we have launched. The first one is the 100-year small portfolio. So in this portfolio, we have ETFs, and they include exposure to the US market, exposure to fixed income securities of government, exposure to low volatility Nifty stocks, and exposure to gold. Right, this is a very low drawdown investment, and over the and has consistently delivered 8 to 10% returns when back tested over the last 21 years, and has been able to beat inflation over the last many years. So investors can allocate capital as it is better than FD, and they can also do a churn between equities and this ETF portfolio. So whenever they feel that the markets look expensive, they can move that fund to this 100-year portfolio, and whenever they feel that times like these, when the markets are showing opportunities, they can move their capital from 100-year portfolio to this portfolio. So the other portfolio that we have launched is Green Portfolio ESG Fund. So it's a small case of companies which have a focus towards environment, sustainability, and governance. So as we know that these are the future attributes for companies to sustain and grow in the future, with everybody's focus towards them. So it's a mid and small cap strategy focused towards ESG, which is a differentiator, I would say, aimed at investing in potential multi-baggers that are best in class in terms of qualitative and quantitative factors. So we are creating mid-cap strategy so that we can benefit from the large pool of money that will flow into the high ESG rating companies and become large caps in the future. So there's a significant value that will get created there, and we want investors to benefit from that. So ESG is one strategy where a lot of global emphasis is, and a lot of capital is flowing across the globe to this strategy, and we want our investors to benefit from this. So there's no considerable overlap amongst our existing portfolios and these new small cases. And investors, we would suggest investors to subscribe to these new strategies.
Great, great. So another question, I think we've already answered this. Should we do a lump sum investment or SIP or after every major correction?
So I'm always an SIP man, Karan. I would suggest that investors should continue doing SIPs rather than predicting the market, as it is very difficult to predict the markets in short term. A lot of news and other events take charge when it comes to short term markets. But one should consider doubling down whenever they see that deep red markets, like days like last week. We saw a few days where the markets were deep in red. You can double down on your SIPs. Remember that Warren Buffett has made most of his wealth from winner investments, which he did when the markets were deep in red.
Yes, yes. Okay, so the next question is on our fees. They're saying that your fees is comparably higher than the minimum investment size. What is the ideal investment size that we should have?
So we have explained the ideal investment size in the description of the respective small case pages. I would say you can invest easily 5 to 15 lakhs in each of our small cases without any constraint, and these are highly liquid stocks, and you can easily consume any amount of liquidity. Though the fees that we are talking about is constant irrespective of whatever amount of capital you are putting in into the small cases. So say if you are investing even 10 lakh rupees, the fees will remain constant, right? So you can, I would say that you can keep on doing SIPs and keep on adding to your investments, and this will also ensure higher returns for you going forward. So we also have a percentage of AUM plan where we charge 2% of the investments that you have made in the small case. If you want to choose that plan, you can reach out to us and we will share the details for you to subscribe to that 2% AUM plan.
All right. So another question is on the expectations of return. So the question is, last year and a half, we saw a huge bull run. What should be the practical expectation going forward and on a long-term basis?
So I would say that 20% returns on a consistent basis over years should make you happy. Warren Buffett has compounded at that rate over his lifetime, and we all know where he has reached on his wealth over these years. So our internal targets are obviously higher than 20% expectation. The key is discipline, consistency, and SIPs. So also, I would also, I think we are done with our questions. I would also like to end by concerns on COVID. So we've all seen a lot of concerns in the media about COVID again escalating in some geographies. I would say that we have lived through COVID over the last 2 years, and we have seen most of the wealth creation and liquidity uh, come in these years. The most of the money which is made is in times when there is uncertainty. We are also closely tracking developments with COVID, and we will send you updates and rebalances as we see that there is a need for making changes in our portfolios. So I would also like to end by saying that so 2011 we saw that there was Black Monday. 2012 we saw GDP percentage at 10-year low. 2014 we saw UPA losing elections. 2015 we saw devaluation of yuan. 2016 we saw demonetization. 2017 we saw Doklam issue. 2018 we saw IL&FS crisis. 2019 we saw DHFL crisis. 2020 we saw COVID crisis, and yesterday we saw Black Friday. So if you look at the journey, we have seen every year we have seen some of the crisis coming, and still 2011 the Sensex was 15,400 points, and 2021 we are at 58,000 points. So we have grown so much significantly. We have almost quadrupled over the last decade, and across navigating through these crises. So the lesson here is that you have to stay invested, and this is the bottom line of investing. You have to stay invested, stay disciplined, and keep on doing SIPs.
I think there was no better way we could have put it. I think that's the most important thing.
So thank you so much. Thank you so much, Karan.
Thank you so much.